As a beginner options trader, learning how to trade options can be an exciting experience, but it can also be extremely frustrating and very costly. There are some common mistakes that lead many beginner options traders to lose large sums of money in a very short period of time. So here are 7 of our best trading tips to help you avoid those mistakes and potentially make more money trading options. The first tip is to trade with a commission-friendly brokerage firm, because trading options actively can be extremely costly, especially when paying high commission rates and ticket charges. Now, we trade with Tastyworks because of their extremely trader-friendly commission structure and trading software. So go ahead and click on the link in the description after this video to learn more about Tastyworks and their commission structure, and if you want to see a special offer from us if you do end up opening an account with them. Now, the second tip is to pay attention to risk. So as a new options trader, it's very easy to fall into the trap of just focusing on how much money you can make, but ignoring how much money you can lose with any particular strategy. So just keep in mind that in the long run, not making as much money is always better than losing a lot of money. Now, our third options trading tip is to stick to well-known stocks. So a lot of the times, new traders will look for obscure companies or they'll trade penny stocks, but in my opinion, that is a huge mistake. Now, the reason for that is that when you trade penny stocks or little-known companies, you're going to find that they have very little volume and open interest in the options. They can be extremely volatile, and those stocks are more easily manipulated. So just don't trade them. Now, trading more well-known companies or ETFs is going to be very beneficial for you in the long run because those stocks are going to have tons of volume and open interest in the options. They're going to have a higher probability of staying around longer, and there's just going to be less surprises overall. So just stick to well-known companies and ETFs that have lots of trading volume and very liquid options. Now, our fourth options trading tip for beginners is to avoid complex products. So if you remember XIV was a complex volatility product that gained a lot of popularity among retail investors before losing 95% of its value overnight. So don't trade something unless you're absolutely sure you understand how it works. Now, if you want to be safe, just avoid products with 2x, 3x, short, leveraged, inverse, or ultra in their names or descriptions. By the way, if you're brand new to the channel, please go ahead and click the subscribe button and go ahead and click the bell so you get notifications every time we release a new options trading video. Our fifth options trading tip is going to be to stick with limited risk strategies. So the reward potential of high risk strategies like short straddles and short strangles can be very appealing at first, but they can also leave you broke or in debt in one losing trade. So with these strategies, it's actually possible to lose more than your total account value, which is a situation that you do not want to be in. Now, the sixth tip we have for you is to reverse engineer P&L changes, which is basically just challenging yourself in trying to figure out why your trade's profit or loss changed on a day-to-day basis. Now, the 3 primary causes for option position P&L changes are going to be significant changes in the stock price, changes in implied volatility or the extrinsic value of the options you're trading, and the passage of time, which is just the extrinsic value decay as expiration approaches. Now, all 3 of these things will be changing constantly, so try to figure out which factor is taking charge on any particular day. Now, our 7th options trading tip for you is don't overlook psychology. So when you're starting out trading, a lot of people don't like to think about psychology because they don't think it matters, but the truth is that trading is stressful and being involved in the markets in general is stressful. So learn how you react to profits and losses over time and use the strategies that are easiest on you psychologically. Now, we actually threw in a bonus tip in this video, so let's go ahead and look at tip number 8. Now, tip number 8 is to develop a quantifiable strategy or plan. So without a strict trading plan, I can almost guarantee that you will not succeed long term. Now, at a minimum, a trading plan should include the stock or product to be traded, and it should include a specific option strategy with a quantifiable setup. Now, for example, that could mean selling the 30 delta put and buying the 16 delta put to create a put spread with 30 days to expiration. The next things you need are consistent trade sizing and quantifiable entry, exit, and adjustment triggers so you know exactly what you're doing with your trade at all times. Be sure to check out some more of our options trading videos by clicking on these video links that you see on the screen right now. Once again, I'm Chris from projectoption.com, and thank you for watching this video.